Hey, what is going on, everyone? Stevie the Trader here. Welcome to another video and welcome to episode 3 of the educational series. And today we have market terminology. All right, let's dive right into it. So we have bullish. So they think price is going to go in an upwards direction, right? So think of bulls, they have horns, and then they charge at you, they charge forward, right? So you are just anticipating price is going to go in an upward direction. Now bearish, think of bears. They stand up and then they pounce, right? So they're stomping. So that's why you say, I'm bearish, you think price is going down. I'm bullish, I think price is going up. Pretty simple, okay? Now we have position size or position. So in regards to what stock you're in, how many shares or option contracts you have. So with position, you could say, what is your position in Apple? So people are basically asking you how many shares you have or how much money you put in. And then position size is pretty much the same thing. So what's your position size? So now we have going long or long. So this is similar to bullish. You're taking a position with the anticipation of price going in an upwards direction. So people will say, I am long Apple. I am going long on Apple shares. Okay. Now the opposite, you have short or going short. You're taking a position with the anticipation of price going in a downwards direction. So you are short, you think the price of Apple is going to go down or going short. Same thing. You guys can look up short, like how it works, but pretty much it's you borrow shares from a broker and you sell them to somebody. So at $100 you sell them and then you buy them back at 90, you keep that difference, which is 10 bucks. So that's it in a simplest form. You guys can look up Google or other YouTube videos on shorting. So volume, how many shares are traded. So if you'll look at here, these little bars right here, they are volume bars. So if you look right here, it tells you each bar how much volume is in each bar. So if you look at the beginning here, 881,642 were traded in this 5-minute volume bar. Okay. Price action, the movement of candlesticks. So people will say, what's the price action saying? Or are you a price action trader? So it's the movement of these candlesticks. Just ignore it without all these these colored lines I have, all of this. Price action is literally just the candlesticks moving. And people just trade candlesticks with support and resistance. That's the type of trading you can do. Chart, the display of candlesticks on a screen where you see price action happen. So this is the chart. People will say, what's the chart saying? What do you see on the chart? What's on the 10-minute chart? Okay, so it's just in regards to everything going on around here. Technical analysis, the study of historical movements on a chart. This is where you make an analysis, to determine where price may go in the future. So you're using technical analysis to determine where price is going to go on next. We don't know where price is going to go, right? But you're using indicators, patterns, like you all draw right here, symmetrical triangle, right? You're using this to determine where price will go in the future based on historical movements. Like the support and resistance line, they happen in the past. They happen here, not here. Okay, so that's it in a nutshell. So next we have fundamental analysis. So this is pretty much the study of, you're looking at the balance sheets, the revenue, all that stuff um, that has to do with the business itself. And you can do either both. You can do fundamental or technical analysis to trade. Fundamental, they don't really look at the charts and stuff. They just look at, the economical data, and then they determine if they take a position in the trade. Technical analysis, we look at charts and determine our trades based off that. Now, you can do both, right? You can, let's say you're seeing that they don't have enough assets to cover their expenses or something like that, right? And you can come on the chart, maybe on like, usually you look at like a weekly or something, and be like, you know what? I just found out around here that things aren't looking good in the books, right? Their earnings, they missed earnings. Earnings happen every 3 months, roughly. That's what you see here. These little numbers, it means like the earnings, if they per share, if they missed it or not. So they could miss it, and the news is bad, and poof. See, that's a fundamental thing. So you could know they had good earnings here and take a position, and then long term it goes up. So that's it in a nutshell. You can look up more detailed information. I just want to go over the terms with you guys. Support and resistance. You guys know what that is. I just wanted a definition for you guys. A theoretical line on the chart drawn by yourself where you see price bounced off of, and then resistance is basically the same thing, but it got rejected. So it is theoretical. So this is drawn by us, but psychologically, think about it. There's hundreds of thousands of other people probably seeing the same line that you're drawing, the same thing. We're all drawing the same stuff. We see it, so we go based off what we see. So if we get 24 and we see a lot of resistance in the past, a lot of people are going to sell short and anticipate the price will go down. So they'll put that pressure on, as you see right here. So that's pretty much what the technical definition of support and resistance is. Now, go to breakout and breakdown. These are pretty much the same in that breakout is when price gets above a resistance level and keeps going upward. Breakdown, this is where price gets below a support level and moves downward. So to show you guys visually, right here, you can see price broke out of this resistance, right? And usually it will continue to go, but in this instance, you didn't see that. But same thing, we'll do a breakdown. Price broke below this support and kind of continued downward, right? Not the best example, but it's pretty simple concept to get. Like this is a breakdown. We broke below right here, break down, and price moved downwards. Just think of the opposite of a breakout. Flush, price aggressively selling off, so it's the same thing as what you saw there. It flushed below this 2270, kept going down. Or mooning, you would think the opposite, it's going up. Now, you have low of day, high of day. So HOD is high of day, the highest price has reached in that particular day. Low of day, this is the lowest point price has reached in that particular day. So usually on Thinkorswim, my platform, you'll see right here, low of day is right here, and then high of day, usually there's a mark that will say the highest point in that day that price got to. Oh, it's based on the time frame you're on, sorry. So look, 5 minute, 20, 32, high, low. So LOD, HOD. Fake out, there's a point on the chart, usually a support or resistance, where you thought price was going to continue in a particular direction but reversed. So fake out, you could say this was a key resistance area and you thought price was going to go up. So let's say you entered here, but you see these wicks, it got rejected, so you got faked out that was going to go that way. Same thing here. We thought price was going to keep going up and we got faked out and price reversed. So that ties in to the other term right after this, reversal. Price begins to go in the opposite direction. So you could be like, I got faked out, and then the reversal happened here on this candlestick, and the price went down. Key area, there's a point on the chart that is important where we can see price move aggressively in one direction, strong resistance, and support area. So pretty much it's, sorry about that, I didn't mean to do that. Where are you? I wanted the main chart. So it's basically where you see a lot of support, a lot of resistance, and once you break it, you know there's usually going to be a big outward move. So we could say, yeah, I'm running out of power on you guys. I might have to do a part 2. So let's say we see this area all right here. We bounced, rejected, getting hard, and then once we broke out, whew, we had a pretty big move, right? Now that's essentially what a key area is. I think I had Tesla up for the last example on that. So yeah, key area. You see how here we really flush below it. Same thing when we were struggling really hard to get above it these 2 days, and then once we did, we pushed up. So you'll see a very aggressive moves when you find a key area. Yeah, I can't find a really good example. Like right here, sorry. You should say right there, bounce, 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 and then we flush. So the key area is where you see great support and resistance. And once you break it, you'll see a flush, or you'll moon up, you'll rocket up, you'll explode up. All right, since my laptop is dying, I'm actually gonna do a part 2 for you guys. That way, I'm not. If it seems like I'm rushing, it's because I'm trying to get through everything super quick. But yeah, I'll go ahead and do a part 2. I'll see you guys on that video. If you guys enjoyed, take a screenshot, take your time, like really digest these terms, okay? So thank you guys. Comment below if you have questions on part 1, and I'll see you on the next video.